Hi there, traders. This is Brad Goodwin with the FX Market Insight for the 3rd of August. All right, we've just ticked through 5 p.m. New York, so we're starting on the Friday, officially starting with the Asian session. Now, let's just have a look at the major currency pairs now. Sort of as expected, I mean, it was more of a technical drift following the FOMC from the previous day. We did see the US dollar appreciate here across the board. Now, euro, sterling, well, I'll come into sterling in a second. Obviously, the Bank of England raised interest rates, but then Carney went on the sort of back foot a bit, trying to slow things down, saying that, monetary policy had to walk, not run, and all these sorts of things. But very interestingly, the US dollar or dollar yen has not really done a hell of a lot. If anything, it's been in a very tight range. And that's got a lot to do with the growing tensions around these trade tariffs. I expect the China-US situation to blow up very quickly. There's a lot of talk in the news, and I'll come to that in a minute. But there's a lot of disharmony around, and it's trying to work out what is actually happening on the currencies. Dollar CAD pretty much drifting sideways. Once again, I think it's one of those currency pairs that's got too many external influencing factors to really make a good, solid grasp of where it's really going. A lot of it doesn't make sense. Now, out of all these currencies, I sort of covered this in the analysis sort of yesterday. I would have thought after the FOMC on Wednesday, we would have seen the market settle down, the dollar drifts back, which it did, and then start to see a gradual rise in the US dollar, especially against euro and dollar yen, okay? Because those two central banks very recently neutral to dovish, where we had the FOMC still, in my regard, hawkish. And then you had the situation where we've got the Aussie and Kiwi just going on for the ride. Now, to me, that makes all good sense. And I was actually waiting for the Bank of England to see what was going to happen here. But a lot of the move has been attributed to the escalation in, as I said, trade tensions brewing around the US-China situation. Now, if I just come back over here to the news, and I'll just give you a look at this. I mean, this is where it starts to get a little bit smelly, because what we know about geopolitical events is they are hard to know when they start, they're hard to know when they finish, and it's hard to really understand what impact they overall have. Now, dollar strengthens, mounting worries about US-China trade war. Now, it's a common theme now. They've got sanctions against US has got fresh sanctions against Russia, Turkey, obviously China as well. Now, a lot of these countries aren't like huge influencing countries like China is in the global markets, but they all sort of add up to be, everything's against the US. So China stands its ground after Trump amps up tariff threats. Now, I mentioned this yesterday. I think Trump is trying to get the Chinese to bite. If you can get them cranky or saying something, then they can come to a table and start negotiating. At this stage, China aren't playing at all. They're just going to start doing their own thing. So it's just going to create a little bit of disharmony across the board. And as you can see here, the Canadian dollar edges lower as trade tensions weigh on risk assets. Basically, the news services are really struggling to find, valuable real news. So they're actually sort of focusing on the trade tariffs. I think that's really coming from the Trump administration as well. So that's something we're going to work with. So then you come back to, if we have a look at the major currency pairs, just to sort of really focus on this, is you're looking at where these moves are coming from. Now, in my opinion, I was looking at it yesterday going, well, the FOMC, hawkish, we should see the US dollar rally, which it did, but then it looks like these trade tariffs have really started to kick into play, and they are starting to impact some of these pairs. And that's what you have to be aware of. Now, the currency which should be moving the most is dollar yen, and it's not at the moment. So this is the one you have to really watch very closely. And the yen crosses haven't done a hell of a lot, with dollar yen not really going anywhere, and a little bit of up and down action here. The yen crosses are still primed for a big move, and that's where the focus will be. I wouldn't worry about dollar CAD. It's got NAFTA, OPEC, a whole heap of other crazy issues going on there. It's too hard to work out. But these other pairs have already sort of left the building and broken through those technical levels. Now, just to come back and give you a bit of insight into, and I'm going to do an extra webinar on this because it was probably a good learning experience for a lot of traders that aren't aware of what's going on with the central bank announcements. Now, you look at the key level here where sterling was now, it's around sort of 130.75 to 130.85. That's the sort of level sterling was at, maybe even around 70, 130.70 before the Bank of England. They raised rates. We see a spike to the top side, and then you see a massive fall down, and then you see the retracement back to that sort of key level, and then it starts to drift lower. Now, there's a number of different factors in play here. The key one for me was, if I just come back to the actual data itself, is actually looking at the numbers. The change here in the vote count was quite hawkish. Okay, so a unanimous vote on raising interest rates. The rates obviously increased by 0.25%. Then in the statement as well, there was reference to interest rates being only going up a little bit further and then staying still for a long time. So that was enough to sort of see sterling crash lower, right? And this is still, if anything, so you see the initial spike, and trading this, it looks easy, but it's not. Okay, you see the initial spike on the statement, so that's on the rate decision and the hawkish change of the vote count. Then the statement sends it lower, screaming lower. There's no liquidity. That's why it's such a big range. Okay, so they're talking about, yeah, we may have to raise interest rates, but it's not going to go far, and it's going to be, that'll be pretty much it. So you're looking for the level to get back in. It's around that 130. Well, it's easy to say in hindsight. I'd say 130, sort of 70, 75 is the core level. That was the level it was at before anything happened. So that's what traders look at. We get the retracement, and then it sort of starts to drift lower from there. I think the last part of that move was pretty hard to sort of call. I'd still like to sell rallies the way that Carney's really being very, well, dovish really with regards to further interest rate hikes, even though he's admitted they will be coming. You know, I think the move is pretty much over. I can't see it going too far at this stage on the back of that one decision. So this is where it comes back to. You're like, okay, so we've got these moves in the major currency pairs now. Where the hell, what do we look at now? Well, that's the funny thing about this is you've got all these technical levels. Now we've got all these levels, euro and sterling are broken down through, even the Aussie. You're really looking for what we need, and this is what we haven't been getting for some time, is where the economic numbers start to match up and give us the next kick. And what I'm talking about is, say, for instance, like the Aussie's already going lower. Well, today we've got Aussie retail sales figures. Now, these are really important numbers. If we get weak numbers here, well, that goes with the current short-term trend in Aussie, and that's a really nice trade, and that's where we really start to get the big moves on the downside. So all the numbers, you've got to start connecting, start thinking laterally across the market. The Euro's moving lower, Aussie's moving lower, Kiwi's lower. Look at the numbers, and sterling for that matter as well. We've got loads of sort of secondary or maybe top-tier, second-tier numbers. UK services PMI will be another good one. Retail sales figures in Eurozone. Any of these numbers are weak, the market will drive those currencies much quicker than they'll buy them because the trend, momentum, the short-term trend is down. Momentum is on the downside. So invariably, they will sell quicker than they otherwise would buy because that's the easiest direction. Then as we come through the, obviously come into the North American session, this is going to be the focus for a lot of media. A lot of the stuff you might read today, a lot of the columns and things, it's all about the non-farm payrolls. Okay, so usually it's just the payroll number itself, but we do know that the Fed is watching very closely the average earnings. Right, this is probably the more important number to be focusing on. Obviously, the unemployment rate comes into play, but it's not. It's like the last piece of the data that anyone cares about. It's the change, but probably more importantly, the average earnings. So make sure you're looking at the right thing. So I will be posting some data or some information, I should say, in the trade zone. So make sure you come in. We have been sort of just adjusting the MyFX Trading Hub, so you can actually sort of see a few changes coming up. What we will be seeing is a couple of trade setups here for the non-farm payrolls. Now, it's not the best trading opportunity. The best trading opportunity on the non-farm payrolls is after the event. I'd say like at least a minute after. Now that seems weird because you see it fly about and then you're like, oh my God, I'm missing it. you're not missing anything. Believe me. The only thing you're missing is extreme volatility and a lack of liquidity. And that's when you get into the currency pair. Don't forget, there are 3 variables here coming out. So when you do come into look at the opportunity and you think, well, non-farm payrolls, everyone sort of talks about it. Yeah, they're talking about it because it's a big number. But I tell you what, trading on the release will be devastating for your account because you may get it right, but the level of volatility will flush your positions out before you even get a chance to manage them. Okay, so non-farm payrolls, 190K. Average earnings for me is the key numbers. All right, I'm not even really too concerned at all about the unemployment rate. You get the non-farm payrolls, say, being strong and average earnings being strong. This goes with the current move in the US dollar, and the US dollar will be up towards 96, okay, on the dollar index. And that's something that you need to consider. Now, if the numbers are extremely weak, which is hard to fathom, what we need is really severe weakness, and that should push it back down towards this previous resistance line, which is now acting as support. Now, actually, while I was talking about that, think about the trade tensions here. Just coming back to this, I forgot to mention it. Look at the offshore yuan, the dollar yuan. Now, the US dollar is going through the roof here. And you look at that and you think, well, that's a pretty solid move on the back of, these trade tariffs. Of course, the trade tariffs are going to impact China. So I don't know what they're doing. If they're taking specific measures to devalue the yuan, well, that's going to piss everyone off. But I'm surprised with this move that we haven't seen a more sustained move on the Aussie and Kiwi in particular, right? Australia and New Zealand, for that matter, let me just change the pen. These 2 currency pairs here are hugely reliant on China. Okay, it's their biggest export market. So anything happens to China, it impacts Australia and New Zealand very quickly. Now, these currencies have drifted off pretty much with the US dollar move, but they're off like 30 or 40 points. China's up about 300 points or 400 points at least. You would have expected these things to move more. So this is what the market's trying to work out. Are these trade tariff issues real or not? Are they really going to impact? So either way, the US dollar from the FOMC to me is a bullish. It's a buy situation. So that was enough for me to get into these trades yesterday. From here, the trade tariffs are going to take over. And this is where the argy-bargy comes back into play, and it's a bit harder to manage. So just be aware, we don't really have solid levels here. If anything, Euro's got a level that's tweaked through down there at 116. We don't have great levels to be using to get into these trades. It could be the seat of the pants stuff. So what I'll be focusing on more so as we come into today's trading is really having a look at where just micromanage the opportunities at this point, because once these geopolitical issues blow up, you're going to lose control of the currency. So today, in the Asia session, Aussie retail sales, a really major focus. You come into the European session, out of all the data, the UK services PMI will be very important. As I said, sterling is on the back foot. If it breaks down through 130, the figure, it's going to be, it should start to run. And then obviously we get the US non-farm payrolls. That's going to be a ball breaker and, potentially really push the US dollar higher, or see it just rolling over a bit. And then the major currencies will come back into the range. All right, guys. So plenty to think about. There's, loads of opportunities throughout the day. Don't get sort of too carried away sitting in front of the screens too long. As I was saying, like on Fridays, get yourself organised and start to have a look through what's coming out next week. We've got a huge week in the Asian session in particular, with Aussie and Kiwi data and Chinese data across the board. I expect further issues with those trade tensions to increase. So that's another thing to focus on. But there's plenty of opportunities. And the good thing is, like next week, once we get through the Aussie, the RBA and RBNZ, we've got just really solid data to push these currencies around. And hopefully they all match up with the recent activity. All right, so that's pretty much it. Your job is keep an eye on the news wires, keep an eye on what's going through the market. You're trying to identify where the tension is, what the raw nerve in the market is around what's pushing the currencies around. Unfortunately, I think it's going to be these things here, like Trump. He's obviously ruffling Russia's feathers again, and I expect something out of China. So we'll see how that plays out. Anyway, that's the FX Market Insight for today. There's a fair bit to sort of think about, and sometimes when you are trading, the hardest thing is just managing the opportunities and waiting. Like if you happen to be out yesterday and you missed the opportunity on, let me just change the screens here, on these major pairs, well then, you just missed it. And that's just hard. You can't let that get you down. If anything, for me at the moment, Aussie is a sell on rallies. So is Kiwi. Euro sell on rallies. Sterling is as well, but it's pretty hard to see it sort of rallying back towards 131. So we have to start looking for new levels here. If anything, I would be suggesting around sort of 130, 65, 70, and selling rallies there. Okay, so we're going to keep an eye on these trade tariffs. As I mentioned, dollar yen is the key currency here. If there's any escalation, we should see dollar yen lower. If there's nothing comes out, well, I think it's just going to continue to trade sideways. And dollar CAD, dare I say it, I'm going to leave that puppy alone. It's a little bit too hard for my liking. All right, guys, that's it for me. Have a good trade day. I'll see you in the trade zone. All the very best. Cheerio.